Ethan was 34 years old, making almost $200,000 a year, and still afraid of the stock market. Not because he was broke, not because he lacked intelligence, but because 10 years earlier, he watched his father lose almost everything trying to beat the market, and that memory never left him. Back then, his father believed he was smarter than everyone else. Tech stocks, growth companies, market predictions, financial news all day, charts on multiple screens. He treated investing like competition, like a game, and for a while, it worked. The profits came fast. Friends started asking for advice. Family members called him financially gifted. Even Ethan started believing his father had figured out some secret formula. But markets have a dangerous way of rewarding confidence, right before destroying it, and slowly, the obsession grew. More risk, more leverage, more emotional decisions. Until one market crash erased years of gains in months. The house became stressful. Arguments became normal. Sleep disappeared. And Ethan quietly learned something most people never understand early enough. Money problems rarely begin with lack of income. They begin with emotional behavior. Years later, that lesson still controlled him, even now, while sitting inside a luxury office building in Manhattan, surrounded by people discussing stocks all day. Ethan still remembered those nights. The anxiety, the pressure, the emotional chaos, and maybe that is why he became obsessed with one question. Why do so many rich people avoid stock trading and quietly choose simple index investing instead? At first, the answer felt disappointing, because modern internet culture trained people to believe wealth must feel exciting. Fast trades, big wins, crypto millionaires, young traders making millions overnight. Everything online looked dramatic. Nobody wanted slow wealth, especially in America, a country emotionally addicted to speed, fast success, fast money, fast status. Even investing became entertainment. Financial influencers screaming about the next Tesla, TikTok traders posting six-figure gains, YouTubers showing Lamborghinis beside stock charts, and slowly, the market stopped feeling like investing. It started feeling like a casino with better branding. Ethan noticed this everywhere. Even smart people became emotional around investing. Doctors, engineers, lawyers, business owners, highly intelligent people, making financially irrational decisions, because intelligence alone does not protect people emotionally, especially when greed enters the room. And greed always enters eventually. That is the part nobody likes admitting. Most people do not actually want stable wealth. They want emotional stimulation attached to wealth. They want the feeling, the excitement, the fantasy, the possibility of suddenly escaping ordinary life. And stock picking feeds that fantasy perfectly, because every stock carries a story, a dream, a future identity. This company could explode. This stock could change my life. This is the next billion-dollar opportunity. The language itself becomes emotional, and emotional investing creates emotional behavior. But index funds feel completely different psychologically. There is no fantasy attached, no ego, no genius investor identity. Just systems, quiet systems. And wealthy people eventually fall in love with systems because systems reduce emotional destruction. That realization changed Ethan completely. One winter evening, he met his uncle Richard for dinner in Connecticut. Richard was 62, calm, quiet, financially free. No social media presence, no flashy lifestyle, no Rolex, no Ferrari. But privately, Richard owned millions in assets, commercial properties, retirement accounts, long-term investments, and strangely, his life felt peaceful. That confused Ethan, because online wealth always looked loud. But real wealth often looked quiet. During dinner, Ethan finally asked him directly, "How did you build all this?" Richard smiled slightly, then took a sip of coffee. "I stopped trying to be smarter than the market." That sentence hit Ethan immediately, because modern investing culture teaches the opposite. Outperform, predict, beat everyone else, find hidden opportunities. But Richard explained something deeper. The market already contains the intelligence of millions of people that changed everything psychologically. Because suddenly, investing stopped being about ego and started becoming about participation. Richard continued, "Most people destroy wealth trying to outperform reality." That sentence stayed in Ethan's mind for months, because the more he studied wealthy people, the more he noticed a strange pattern. Many rich people quietly preferred index funds, especially wealthy families, business owners, executives, people with actual long-term assets, not internet personalities, not gambling-style traders, actual wealthy people. At first, it made no sense emotionally. Why would rich people choose something so simple? Why not aggressively chase higher returns? But then Ethan understood something important. Rich people think differently about risk. Middle-class investors often focus only on upside. How much can I make? Wealthy investors focus on survival. How much can I avoid losing? That changes behavior completely, because once people build real wealth, protecting it becomes more important than emotionally exciting growth. And index funds quietly solve one massive problem: human behavior. Because the biggest threat to most investors is not the market itself, it is their own emotions. Fear during crashes, greed during rallies, panic selling, overconfidence, revenge investing. Constant comparison, the market becomes psychologically exhausting, especially now in the attention economy. Because social media amplified financial pressure dramatically. Every day, someone younger looks richer online. Someone claims they made millions trading options. Another influencer posts screenshots of insane gains, and slowly, people begin feeling financially behind. That emotional pressure destroys discipline, especially among men. Because modern masculinity became deeply connected to visible financial success. Cars, watches, luxury apartments, designer lifestyles, everything became public performance, and investing became part of identity. That is dangerous, because once investing becomes identity, losses feel personal. Ethan watched this happen constantly in New York. Young professionals chasing aggressive trades, not because they needed money, but because they needed validation. That is the dark psychology behind modern investing culture. People are no longer just building wealth, they are trying to build self-worth through wealth, and those are completely different things. Index funds interrupt that emotional cycle because they remove constant decision-making. No endless predictions, no emotional trading, no obsession. Just consistent participation in economic growth. That simplicity feels boring online. But boring is often financially powerful. Nobody becomes viral for quietly investing every month for 20 years. But that behavior quietly creates freedom. And freedom feels different from excitement. Excitement is emotional. Freedom is psychological peace. Richard explained this perfectly one evening while walking through Manhattan. Most rich people eventually realize they do not want financial excitement anymore. They want stability, predictability, cash flow, time, energy, peace. That changed Ethan's entire understanding of wealth, because the internet trained people to associate wealth with luxury visibility. Private jets, supercars, luxury watches, penthouse apartments. But real wealth often looks invisible. Tax efficiency, low stress, diversified assets, long-term systems, quiet investing, and index funds fit perfectly inside that structure. Because index funds are not designed to impress people, they are designed to survive. That is why wealthy people trust them, especially after experiencing financial chaos earlier in life. Many rich people already learned painful lessons: bad investments, overconfidence, market crashes, business failures, and eventually they stop chasing intensity. They start protecting consistency instead, because consistency compounds. That is the magic most people underestimate. Not intelligence, not predictions, consistency. A simple investor contributing monthly into index funds often outperforms emotional investors over long periods. Not because they are smarter, because they survive longer, and survival matters more than brilliance in investing. That realization became deeply personal for Ethan during the next market downturn. Stocks crashed again. Fear exploded across social media. Financial influencers suddenly disappeared. The same people screaming buy this stock months earlier now looked terrified, and emotionally enough changed for Ethan. His investments kept running automatically. No panic, no obsession, no emotional chaos. Because systems protect people psychologically. That is why wealthy investors love systems. Systems reduce emotional mistakes, and emotional mistakes destroy more wealth than bad markets ever do. Meanwhile, his coworkers continued emotionally reacting to every market movement. One man lost thousands day trading options. Another became obsessed with crypto leverage. Another constantly checked stock prices every 10 minutes. The stress looked exhausting, and Ethan noticed something important. Most people chasing aggressive investing success already looked emotionally tired. That is the hidden cost nobody talks about. Trying to outperform everyone forever becomes mentally draining. Constant analysis, constant uncertainty, constant comparison, and modern internet culture makes it worse. Because algorithms reward emotional content, not disciplined behavior. Market crash, top 3 stocks to buy now. This stock could explode. Fear and excitement generate clicks, but emotionally, that environment destroys rational thinking. Index investing removes people from that emotional battlefield, and maybe that is the real reason wealthy people prefer it. Not because they lack ambition, but because they understand human psychology better, especially their own. Because the older wealthy people become, the more they realize money is not only mathematical, it is emotional. A person earning high returns while constantly stressed is not truly financially free. But a person quietly building stable wealth with peace of mind often is. That realization slowly transformed Ethan's life. By 40, he owned multiple index fund portfolios, retirement accounts, real estate, cash flow assets. Nothing looked extreme publicly, but privately. His life became stable. Calm mornings, lower stress, more freedom, more control over time. And one night, while sitting alone on his apartment balcony overlooking New York, he remembered his father again. The stress, the emotional trading, the constant pressure. And Ethan finally understood something painful. His father was never truly chasing wealth. He was chasing emotional escape. Escape from ordinary life. Escape from insecurity. Escape from feeling average. And modern investing culture sells that fantasy every single day. The fantasy that one perfect trade will transform everything. But wealthy people eventually stop chasing fantasy. They start building structure. That is why rich people quietly choose simple index investing. Because after enough experience, they understand something most emotional investors never fully realize. Wealth is not built by constantly chasing excitement. It is built by avoiding self-destruction long enough for consistency to compound. And in a world emotionally addicted to speed, that mindset quietly becomes a superpower.